Ever wondered how to buy a manufactured home even if you don't own the land? Let's break it down. Hey there folks, Kris McCullough here, retired Marine, loan officer who loves tackling the tough stuff. Today we're diving into a topic that gets a lot of questions. It's a bit different, but super important for aspiring homeowners. Buying the house but not the dirt it sits on? It's more common than you think, and a great way to get into a home without breaking the bank. Imagine this. You found the perfect manufactured home. Great layout. A nice little porch. In a community you really like. The only catch? You don't own the lot. You lease it. Traditional mortgages often hit a roadblock here. A manufactured home that can be moved isn't always seen as real property. Enter the chattel loan. A different path to the same dream. The dream of home ownership. Your own space, your own front door. My team and I, the KDM Team, fund loans other lenders avoid. This is one of them. We believe everyone deserves a shot at owning a home. By the end, you'll know what it is, how it works, and if it's right for you. Ready? Let's get into it. A friendly, smiling Kris McCullough in a casual shirt, standing in front of a modern manufactured home. All right, let's get right to the heart of it. What in the world is a chattel loan? The name sounds a little old-fashioned, I know. It makes you think of cowboys and cattle drives or something, but the concept is simple and very modern. A chattel loan is a personal property loan for a movable asset. In finance, you've got real property, land and buildings, and personal property, basically everything else. Think cars, boats, RVs, and manufactured homes that aren't permanently affixed to land. With a chattel loan, the home itself is the collateral. That's the big difference from a traditional mortgage. A mortgage ties both house and land. A chattel loan ties only the structure. It's a lot like an auto loan. You hold title. Lender places a lien until payoff. Because land isn't involved, the process can be simpler and faster. No land surveys, fewer complex title searches, less red tape. The focus is on the home's value and condition. Don't let the term chattel throw you. Just think home-only loan. The ground it rests on is separate, usually a lease or lot rental. It's a practical solution for a common scenario and helps thousands become homeowners every year. It's not lesser than, just different. So, where do you typically see chattel loans in action? Not for a traditional brick-and-mortar house in a cul-de-sac. These loans thrive in manufactured home communities, mobile home parks, where residents own their homes and pay monthly lot or space rent to the park owner. Parks maintain grounds and utilities, and often offer amenities. It's a popular, affordable lifestyle for young families and retirees. You'll also see them when placing a home on leased land, maybe a family property arrangement, or with landowners who lease plots specifically for manufactured homes. Since you don't own the land, a traditional mortgage is off the table. Cue the chattel loan. It neatly separates the home, personal property, and land, real property. They're incredibly common in manufactured housing, backbone of this market. If you're eyeing a home in a park or on leased land, you're in chattel territory. It's the standard way to make the purchase happen. A sunny, well-maintained manufactured home community with green lawns and a paved street. Let's talk key components: down payment, interest rates, credit terms, and title. Many chattel programs allow as little as 5% down. On a $70,000 home, that's just $3,500, often far more achievable than $14,000. Now, interest rates. Chattel rates generally run 1 to 2 points higher than traditional mortgages. If mortgages are 6.5%, chattel might be 7.5 to 8.5%, often a fair trade-off for lower upfront cost and accessibility. Credit can be more flexible. Conventional might want 640 plus. Many chattel lenders work with low 600s, some even down into the 500s. They'll look at your whole picture, income stability and on-time payments. Lower scores may mean slightly higher rate or down, but it doesn't automatically disqualify you. Terms are often shorter than 30 years, 15, 20, even 23 years. Shorter term means faster payoff and less total interest. Ownership works like a car title. The lender is listed as lien holder. When you make the final payment, the lien is removed and you own it free and clear. It's a straightforward process that's easy to understand. And yes, closing costs can often be rolled into the loan. So, who is the ideal person for a chattel loan? What do lenders look for? First, income, stable and verifiable. Next, credit history, a pattern of paying bills. A few dings aren't a deal breaker. Lower scores may mean a larger down payment or strong compensating factors. The home must qualify, habitable condition and HUD safety standards. It's ideal for first-time buyers, retirees downsizing, or families loving park amenities. If you have steady income, a reasonable plan, and a qualifying home on leased land, you're the person this was designed to help. Let's start with the pros. Low down payment, often 5%, opens doors for countless buyers. Faster approvals, fewer land complexities, less paperwork. Flexibility, buy where a mortgage won't work, and you still build equity in the home itself. Now the cons. Rates are typically higher by 1 to 2%. Over time it adds up. Manufactured homes can depreciate. Growth often differs from site-built homes. Resale can involve a smaller buyer pool and park approval steps. You'll factor lot rent and follow community rules. John and Sarah, late 20s, renting a cramped apartment, new baby, savings around $5,000, traditional homes at $300K plus felt out of reach. They found a nearly new 3-bed, 2-bath and a great park for $80,000. Their bank said no. They found us. We introduced a chattel loan. 5% down was $4,000. We structured to roll in most closing costs. Approved for 20 years. Loan plus lot rent beat their old apartment payment. Within a month they closed, moved in, painted, planted, and started building equity. For them, chattel wasn't second-rate. It was the key that unlocked their dream. So, there you have it. The chattel loan demystified. Not a monster, just a powerful tool with lower down payments and flexible credit. Yes, there are trade-offs, slightly higher rates and different resale considerations. Don't let anyone claim there's only one right way. The American dream looks different for everyone. A chattel loan is one of many paths to a secure, happy home. I'm Kris McCullough, retired Marine, loan officer, and owner of the KDM Team. We're known for funding loans other lenders fear. We help homeowners fund homes and build dreams across multiple states. Find me on Facebook, YouTube, and Instagram, or visit krismccullough.com for more information.